In today's video, I want to discuss why Google Alphabet is a must-buy for long-term investors. Now, me personally, of course, I'm biased since I own shares of Alphabet. It's a pretty big position in my portfolio. Now, Alphabet, as you know, more recently compared to all the other big tech companies, has not had the best of years, right? Year to date, it's up 26%. Year over year, it's up just 30%. Has a market cap of $2.15 trillion. Now, with all that said, Google, Alphabet in this case, forward PE 20.4 times. We're going to compare it to Meta and to some other big tech companies just so you see how cheap this one actually is. Now, of course, with Google, there are various reasons why this stock is trading at a cheap multiple. For example, lawsuits, right? We've seen some anti-competitive lawsuits against Google. More recently, we talked about the fact that, well, they might be forced to sell Chrome, the browser. In my opinion, that will never happen. I mean, imagine they have to sell Chrome. What happens with all your passwords that you saved on Chrome that Google protects? Some people will say they don't protect your privacy, but okay, that's beside the matter here. Who's going to buy it? Who's going to control all that data, right? Am I going to be comfortable with another company controlling Google Chrome? I don't think so. And again, all of this in the name of protecting the consumer. In the name of protecting the consumer, let's destroy the consumer's experience with various great products, right? So yeah, I just don't see those things happening. I don't think they will be forced to sell Chrome or split anything else. So we've got that. We also got well, maybe not right now, but at first, ChatGPT came out, Gemini, previously Bard, botched presentations, weird results, etc., etc. Definitely not great. So those are a bit of the reasons why this stock has been a bit behind all the others and why it does not get that much of a premium. Of course, the increased, let's say, competition with regards to search, which is funny, right? Because on the one side, the so-called bear case is that, well, Google's bread and butter, which is the search part of the business, is being attacked by ChatGPT, Grok, Perplexity, Claude, all the others, Meta, even TikTok. And then on the other side, we've got regulators saying that, they're way too dominant. Well, the problem there is that they're talking about the Google of the past, not the Google of today. So yeah, it's going to be very, very interesting and very difficult for them to actually make their case today, right? Because Google themselves can say, look what's happening in the search space. Lots of new competitors. There's probably a reason why people keep using Google services. Maybe the reason is because it's the best and most convenient one. Plus it's free. Remember the days, Remember the days where search is free. Because slowly but surely, we are moving away to paid search, right? All of these chats, all of these LLMs that we were using right now, they all have subscriptions, right? Because otherwise these companies won't survive. But which company will survive? The one that just print cash for fun. For example, a company like Google. Funny enough, there was also a conversation more recently with the CEO of Google talking about Google, Microsoft, and he's like, let us compare directly our model to the one that Microsoft has. Well, Microsoft doesn't have, they have ChatGPT. So yeah, some competitiveness there, but I digress here. Anyways, let's continue. Hit all the buttons, like, subscribe, all of that. We really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment to the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. Now, quick overview of the rest here of what the analysts are expecting this company to do. Sales growth above 10%, well, closer to 11%, let's say on average for the coming fiscal years. EPS growing a bit faster than that, especially in fiscal 2024. That's because fiscal 2023 was quite weak. If we look at the current average analyst price target, that sits close to 20% higher than the price we're at right now. If we look at some pricing metrics compared to the 5-year mean, forward PE is lower, EV to EBITDA is lower, price to sales is a bit higher, and then price to free cash flow, this is in the last 12 months, so that metric is a bit outdated because it's expected that Google does increase free cash flow in the coming quarters. So that's a bit higher than the 5-year mean. And then price earnings to growth sits at 1.24. We can compare Google to Meta, for example. You can see here that Google is cheaper than Meta on a forward PE, price earnings to growth, price to sales, EV to EBITDA. The only one where it's more expensive is that price to free cash flow in the last 12 months. Now, look at this. Even Meta at these prices, to me, is a buy. Switching to, I think, the number one or number two, I don't know, depending on the day that you're watching this, number one or number two biggest company right now, and that's Apple. You can clearly see that Apple gets a huge premium compared to a company like Google. Forward PE, higher. Price to sales, much higher. EV to EBITDA, higher. The only one where Google is higher is again that price to free cash flow. And I mean, look at the PEG ratio. Price earnings to growth, 3.52 for Apple. This is just crazy. And of course, Google is also buying back quite a lot of shares. In the last 5 years, shares outstanding have decreased by 11.7%. And so let's talk about what happens when you're buying Google today. What does Google deliver to you today and what might it deliver to you in the future? Just an FYI here, today, all 7 of their products and platforms with more than 2 billion monthly users use Gemini models. That includes the latest products to surpass the 2 billion user milestone, Google Maps. Imagine having that many products with that many users. Anyways, today, if you buy Google, Alphabet, you're getting quantum computing, autonomous vehicles, cloud, chips, YouTube, advertising, and a world-class AI research team. Not bad, right? Not bad for $2.1 trillion. Now, with regards to the recent announcement, Willow. Willow is Google's new quantum chip. So think of it like a super advanced computer part that uses the strange rules of quantum physics to do calculations. Now, unlike regular computers that use bits like on and off switches, Willow uses qubits, not just Willow, other players as well, which can be both on and off at the same time thanks to quantum mechanics. This allows it to solve very complex problems much faster than traditional computers. Some might even say that this is the biggest threat, not Willow, but quantum computing is the biggest threat to Bitcoin. Still far away from that, but I mean, this is the start and I think things are evolving quite quickly. And the big deal with Willow is that it's much better at correcting mistakes or error that happen during these quantum calculations, making it more reliable and useful for big real-world problems. So yes, like I said in the previous videos, when we talked about quantum computing stocks, right? Or all these small companies, I said the same thing. Why even bother? Why even bother looking at the small ones? I understand maybe the upside is much bigger, but the big boys are also in quantum computing. And well, Google basically just proved that. Anyways, moving on here. This is basically what Google has done with regards to revenue and free cash flow and what's expected to do in the coming years. Revenue growth, we've seen what's expected for the next fiscal years, and this is basically free cash flow. So free cash flow is expected to grow 8.6% for fiscal 2024, then 19.5% in fiscal 2025. That's basically because this year right now is quite a weak year, and then grow another 15% in fiscal 2026 to over $103 billion just free cash flow. When buying Google, of course, you get Google Cloud, which is the fastest growing one, right? Last quarter that grew 35% to now $11.35 billion. You, of course, get the search part of the business, which, by the way, I mean, ChatGPT came out around here, and since then, it continues to grow, right? It grew here in the last 12 months, that is. This is a business that continues to grow double digits. Not bad for something that's, well, generating now close to $200 billion in revenue. Then you also get, well, the platform that you're watching this video on, which is YouTube. YouTube in the last 12 months has generated close to $35 billion in revenue, growing closer to 15%. And then last thing here, just a small, maybe silly comparison here, but again, Google compared to Apple. So Apple, this is their revenue the last 12 months, well, annually, 2024, $391 billion in revenue compared to $339.8 billion for Google. Now, if you look at operating income for Google and for Apple, Apple has been flat-ish, right? Around flat-ish since 2022. While Google's operating income continues to grow and is catching up to Apple's operating income, while of course being a company worth $2.1 trillion and not $3.4 trillion and not trading at a forward PE of 30 plus times. But okay, we know maybe the market is giving Apple a higher premium because the market thinks that, well, the future cash flows are more secured than those of Google. Okay, maybe. I just disagree. Moving on here to a quick reverse DCF to basically look at how fast free cash flow has to grow to justify today's price. And we see that the implied growth rate sits at 11%, and that's free cash flow in the last 12 months, which we know has been quite weak. Now, is this a lot? Do we think that Google cannot grow faster than 11% for the next 10 years? I think they can, right? We've seen that in fiscal 2026, free cash flow is expected to be above $103 billion. And here, this only happens in year 6. So yeah, I keep saying this again and again. I think Google, despite its size, is still one of the best companies to buy in your portfolio. I think in 2025, it will outperform. I think with the Trump White House, they'll have less issues, less lawsuits, and I think there'll be just way more collaboration with regards to AI. Inside of Google, I have seen some changes. I've heard about big changes there. So I expect things to move way quicker, and you get basically everything that we've talked about, right? Cloud, YouTube, ads, AI, chips, quantum computing, autonomous vehicles. Yes, I know we'll talk about Tesla here a lot, but Waymo is a big deal. Waymo is going to expand, in my opinion, much, much quicker in the next coming years. And you're basically getting that, I won't say for free, but yeah, you basically get a call option on the Waymo business. Yes, I also know that the CEO did say that maybe in the future, some of these bets that they have inside the company might go public, right? Like we've seen with Intel Mobileye, for example, something like that. So yeah, $2.1 trillion, $175 per share right now, 20 point something times forward PE for a business like Google, in my opinion, is just a no-brainer. But of course, let me know what you think down in the comment section below. Like, subscribe, do all of that, and I'll see you all in the next one. Bye-bye.